Hello there. Wanted to talk today a little bit about keeping your trading simple. Something what I see a lot of traders doing, particularly traders what are struggling to make a profit, is that they tend to make things too complicated, overcomplicated. And while undoubtedly trading isn't the simplest thing in the world, like anything, it can be made simpler, and there's no reason to make things more complicated than necessary, as our old mate Einstein there reminds us. So let's have a look at why simple is better. This is just a quick overview, and I'll talk more about some of these points afterwards. First off, got fewer decisions to make if you keep things simple. Trading is about deciding what actions to take and when to take those actions. So if you're keeping things simpler, you've got fewer actions to take. Makes it easier to decide when to do those things. You've also got less conflicting information. With more and more information that you have, more chances of that information conflicting. That is, some of it saying one thing and some of it saying something completely different. And we'll see this in a minute, a good example of this. Other thing is that the more you've got to remember, the harder it is to remember all of that. So it stands to reason that having a simple trading strategy means that it's easier to remember what it is to do. If you've got a very complicated system or strategy, then the chances are you ain't going to remember every last nuance of it, and you're going to have to keep that written down somewhere and keep referring back to it. And all the time that you're referring back to it, you ain't focusing on what you should be focusing on, which is actually executing it. So having a simple plan just means that you can keep it in your head and no need to go referring back to it. So that means that your head ain't all cluttered up and conflicted. So just makes it easier, as I say, to make decisions, less conflicting information, and to know what to do. Another reason why simple is good, and that means, speaking from personal experience, if you've got a nice simple system, simple setup, you can actually keep your physical trading setup simple as well, which means trading off a simpler computer. For me, it's a laptop, and that means I can trade anywhere in the world where there's an internet connection, which is a pretty good advantage of keeping it simple. Obviously, if you've got a very complicated system that requires hundreds of monitors and all the rest of it, then you ain't going to be able to do that on a laptop, and you're tied to your trading setup basically, which sounds a bit too much like a job for my liking. Alright, so how do traders overcomplicate things? Well, the biggest issue that I see is this, and that is charts with too many indicators on. This is a typical example, and I've seen far worse than this, but this is one what is big enough to fit on this video. And you can see there's tons of stuff going on here. We've got what's going on there. We've got a MACD, got an RSI, got various different averages, volume, got some various bands on there as well. All sorts of stuff going on. And I look at that and I wouldn't have a clue what's going on, I'll be honest with you. Thing is, the more indicators what you put on a chart, as I said earlier, the more chances of conflicting signals. And if you look hard enough, you can always find something what will contradict what you're already seeing. So you could have one indicator while saying go long and another indicator while saying go short. That's not always the case, but the more indicators you've got on a chart, the more chances are of that happening. And if you've got a conflict, how can you possibly know what you're supposed to be doing? And the other thing is, if you're looking at all of this, where really is your focus? You can't possibly focus on all of these different indicators at once. It's just too complicated. So it's a big problem, and as I say, it's one what I see happening a lot. Why do people do it? One of the reasons, or the main reason I hear and I see, is people start off with quite simple charts, and they'll add maybe one indicator, and they'll try and trade off that indicator, and maybe they'll do alright for a little bit of time, and then they'll have a losing trade or a run of losing trades, and so they'll try and filter those losing trades. They'll try and add some kind of signal what removes those trades from their system, and to do that they'll invariably add another indicator to the chart, and maybe it'll work for a bit, and then obviously at some point they're going to have more losing trades, because losing trades are a fact of life. They happen to everybody. That's how it goes. And so they'll try and filter out those trades, and they'll do that by adding another indicator, And this just ends up as a vicious circle, and people just keep adding more and more indicators until eventually you probably filtered everything out, and you're either going to get conflicting signals, as I said, or just no trades left because you've tightened down your system too much. There's another problem, and this is very much related to the too many indicators problem, and that is too many rules. People keep adding rules to their trading strategy, again, to try and minimise the number of losing trades that they're getting. And these rules, you end up with well, do this unless that happens, or if that happens, do the other. And you just can't keep all these rules in your head, so you have to keep going back to your trading plan, and you can't make quick decisions, and you end up just missing trades because your system's too complicated, and it's just not clear in your head what you're supposed to be doing at any given time. Talking of trading systems, this is another thing. What I see people doing is that they'll have loads of systems, and this usually happens after the last trading system got so complicated and filtered out so many trades because there were so many rules added and so many indicators added that there weren't any trades left, or it just got too difficult to trade. And so the trader goes off and learns another trading system, and that might start off simple and then it get more and more complicated, and the cycle continues. What happens a lot as well is that the trader will add a new system, they'll learn something new and decide, right, this is the system what I'm going to trade now. They'll start trading it, and then after a little bit of time they'll start seeing trades what meet the criteria for their old trading system, and they'll start taking those trades as well and mixing them in. And before you know it, the trader's trading 2-3 different systems all at once, and it's just a major complication. And not only that, but if you want to get consistent results from trading, which is what we're trying to do at the end of the day, then you've got to trade one system consistently. All systems do lose a bit of money from time to time, that's the nature of the beast. And if you keep switching between different systems, there's every possibility that you'll get a losing trade in system number 1, and then a losing trade in system number 2, and then a losing trade in system number 3, and you ain't ever going to get the winning trades in those systems to compensate because you keep moving around and switching systems. So this is, as I say, a big problem I see is trading too many different systems. And this is my pet hate, is watching too many stocks at once or too many instruments at once. And this happens because people don't want to miss any trades, which is fair enough. I can understand the sentiment behind that. But ultimately, if you're trying to watch all of that, I mean, some people do it obviously. I don't know how. Personally, I couldn't cope with looking at something like that. If you're looking at that, you're going to miss stuff anyway because you can't possibly have eyes everywhere. Human eye can only focus on a certain patch of view at once. And so you're going to be ending up scanning for all of that. You're going to miss stuff. That's happens to everybody, and that's, as I say, part of the game of trading. So quite why people do that, I don't know. Maybe it works for them. Don't work for me. So what does work for me? How do I keep it simple? These are my ideas, and I'm not saying that this is what you should do or what anyone should do. This is what works for me, and maybe you'll get something out of this as well. This is how I tend to keep my trading simple. First thing is I have one chart, none of that multi-monitor business, just one chart up on the screen, and that chart has my full attention. One stock on that chart, and I'll just be concentrating on that stock. There's nothing else going on then, nothing else to distract me. Quite clearly see what's happening with that one stock. So I'll cycle through a number of stocks on that chart. I'll have a list of stocks. When I click on a stock name, that stock loads up in that chart, and that's what I'm looking at. Now I might miss some trades obviously, but as I said before, you could have 5 monitors with 400 stocks and you're going to miss trades with that setup as well because you can't be across that many stocks at once. And that's life. You miss some, and you catch some others. But to be honest with you, most of the time, you can flick through. Takes a couple of seconds, maybe 2-3 seconds to look at a chart and decide if that chart is setting up to take a trade or not. If there's a trade setting up, can stick with the chart. If there isn't, on to the next one. 3 seconds per stock. You get 30 seconds. You've gone through 10 stocks, and then you go back again and start again. So you don't have to miss trades, but sometimes you will. As you can see on that chart, and as you will have seen from the live videos, I tend to have one indicator. It's just a simple, well, sorry, not a simple, an exponential moving average, a simple indicator, 10-period moving average, and I just use that really to time some of my exits. It's an optional indicator a lot of the time. Don't even bother looking at it. The thing about indicators, and I've said this before, is that they only tell you, or chart indicators at least, only tell you what's already happened, and that's because they're calculated off old prices, off what's gone on before, which is fair enough. But if you learn to read the prices themselves, then you don't need to learn any indicators, because they're all based off price action. They're just trying to summarise price action for you. You've got the price action in front of you, you've got the source of all that information, so learn to read that, and job done. So I talked about cycling through a list of stocks, and I just have a short list of stocks, maybe 12 to 15 stocks on any given day, certainly no more than 20. That's plenty enough to cope with. That's by far enough stocks to get a few good trades each day, and there's simply no point in watching loads and loads of stocks. You might as well just watch the ones what are going to give you good trades. There are a certain number of stocks what are going to really perform on any given day, so you just want to watch those stocks. So that's what I do each morning, select the stocks what I'm going to watch, and then just stick with those. And once I've got those stocks and I'm watching them, then I just have one simple strategy with just a handful of very simple trade setups based on price. The price is a constant. It's the only thing what doesn't change. Market conditions can change, but prices still move. If you learn how prices move, if you understand what makes prices move, if you understand what price action is telling you, you don't need to change strategies. You know, a lot of people, as I said, will tune their strategy and keep adding indicators, and invariably what happens is it will work for a bit, but that's because they'll tune the strategy to be particularly sensitive to the current market conditions. Could be that we're in a strong bull market, tune the strategy to work particularly well in a bull market. Of course, what happens is the market eventually turns into a bear market, strategy don't work anymore, and that's why people change strategies. If you learn to read simple price action, that don't change. It's always telling you the same thing, tells you what's actually happening in the market, and you're set for all market conditions. So just simple strategies, I say, based on price with a handful of setups, keeps it very easy to remember. You've got no conflicts. You're looking at a chart, either it's a trade or it isn't a trade. A couple of other things what I do, as I say, just use a simple single trading screen. I'll trade off a laptop for a number of reasons what I've already talked about, and I only trade for an hour, 2 hours maximum. You know, midday I'm done, and that enables you, I mean, not only is it great because it gives you the rest of the day off, but it means that it's easier to maintain focus. If you're only trading for a couple of hours a day, it's very easy to stay concentrated just for a couple of hours. If you're trying to trade all day, it's inevitable that you're going to lose a bit of focus. Alright, summary then. As I say, most traders tend to overcomplicate things, and when you overcomplicate things, that leads to confusion and stress and conflict, which is all bad. Keeping trading simple means that your trading just becomes much easier and usually more profitable, and certainly stress-free, and that's, at the end of the day, what we want is easy, profitable and a stress-free life. There we go. Hope that was useful, and have another one for you soon.